Now, you might be wondering, what is Clint Eastwood doing in a video of debit and credit? Now, believe me, with the help of dear Clint, you will be able to memorize the rules of debit and credit with ease. Now, before we take up the business scenario, let's take a very simple example from our everyday life. Assume that your friend gives you a fistful of dollars. Your friend's name is Jane. So she is giving this amount to you as a loan. So definitely you should pay back the amount. So a liability is created when we borrow the amount from Jane. Now, whenever there is a liability, what is a word that is associated with it? You might have heard about credit cards. What is a credit card? A credit card is a sort of a temporary loan that a bank gives you, correct? You swipe the credit card for purchases and you need to pay back the amount only at the month end. So whenever we swipe a credit card, we are liable to pay that much amount to the bank. So a liability is created and the word associated with liability is credit. So here comes rule number 1. Any increase in liability has to be credited. So in this particular case, we are liable to pay Jane the amount and hence Jane's account has to be credited. So we have written one part of the entry, Jane's account has to be credited, and say the amount that we have borrowed is $10,000. So we have to credit Jane with $10,000, indicating that we are liable to pay $10,000 to Jane. Okay, so that is one aspect of the transaction. Now coming to the next part of the transaction. What are you getting from Jane when you take a loan? We're getting cash, right? Now cash is an asset. And what do you mean by an asset? Asset is a resource that can be used in future accounting periods. That is, the benefit of that particular resource extends to future periods also. You can use cash for buying anything in the future, right? So cash is an asset. What are other examples of assets? If you're buying a car is an asset. We can use it in the future accounting periods. Building, even the stock of goods that you have is called an asset. Why is it called an asset? Because it can be used for future accounting periods. Now, in this particular case, the asset that we have received is cash. Now, asset and liability are exactly opposite in meaning. Liability is what we owe to a person, but asset is something that we own and which can be used in future accounting periods. So if liability has to be credited, then we have to do exactly the opposite with an asset, right? And the word associated with an asset is debit. That is exactly the opposite of credit. So continuing with rule number 1, increase in asset has to be debited. So since the asset that we have received is cash, cash account has to be debited with $10,000. So cash account is debited with $10,000. So as per rule number 1, whenever there is an increase in liability, we have to credit that account. And since we are liable to pay Jane $10,000, we have credited Jane's account. And rule number 1 further states that any increase in asset has to be debited. So in this particular case, we are receiving cash worth $10,000 and hence, since cash is an asset, the cash account has been debited with $10,000. So we've completed the accounting entry. So for every transaction, there are two aspects. One is the debit and the other one is the credit. Now suppose out of the $10,000 that you have borrowed, you are returning $2,000 back to Jane. It is exactly the opposite of taking a loan. That is, you are returning a loan. So continuing with rule number 1, whenever there is a reduction in liability, we have to debit. If you notice here, increase in liability has to be credited. So a decrease in liability, naturally it is the opposite, right? So we have to debit it. And likewise, increase in asset we are debiting. So whenever there is a decrease in asset, we should naturally do the opposite. We should credit it. So what is the accounting entry that you have to pass when you are returning $2,000 to Jane? We have to debit Jane's account with $2,000. Why? Because it is a reduction in liability. Now Jane is already a liability. We have to pay $10,000 to her. And that liability is getting reduced when you return $2,000. So it's a reduction in liability and we have to debit Jane's account. So that is why Jane's account has been debited with $2,000. Now regarding the asset part, what are we losing? We are losing $2,000 worth of cash. That is, there is a reduction in cash or there is a reduction in asset. A reduction in asset has to be credited and hence cash account has to be credited with $2,000. If you notice, in the first case, when we borrowed the amount, it was cash account debit and Jane's account credit. When we are returning the amount, we are passing exactly the opposite entry. Jane's account is debited and cash account is credited with the amount that we paid. That is $2,000. So now, as and when a transaction takes place, an accounting entry is recorded in the books of accounts. So there will be so many accounting entries. So one fine morning, if you want to know the amount that is to be repaid to Jane, what are you going to do? Are you going to flip through the pages and sit with a calculator and calculate 10,000 minus 2,000? And again, if you borrowed loan plus 1,000 minus 500 and all that, it's just not possible, right? So basically, you will have to accumulate all the transactions related to Jane in a particular place. This is known as the ledger. So a ledger is an account-wise summary of the transactions. Now, in this particular case, we have recorded two transactions, or these accounting transactions are also known as journal entries. So once you summarize it, these summaries are captured in the ledger. So in this particular case, which are the two accounts which are involved? One is a cash account and the other one is Jane account. So we will open two accounts for the same. So one is a Jane account and the other one is a cash account. So an account is T-shaped. So it has got two sides, the left side and the right side. Now all the credit transactions are recorded on the right side of the account. So always remember, credit transactions recorded on the right side of the account. So obviously the debit transactions will be recorded on the left side of the account. So what is the first entry that has been passed? It is cash account debit and Jane account credit. So Jane account has been credited with $10,000. And I said that for credit, it has to be recorded on the right side of the account. So in Jane's account, this is the right side. So the credit amount of $10,000 comes to the right side of Jane's account, indicating that it has got a credit balance. And the explanation that we have to write for the $10,000, it is by cash. Why is Jane's account credited? Because we received cash of $10,000 from Jane. Now coming to the next part of the transaction. Now we have debited cash account with $10,000. So now in cash account, debit is always recorded on the left side. So $10,000 will come on the left side. And what is the explanation? The explanation is to Jane, indicating that we have received the amount from Jane. So this is the way in which the journal entries are recorded in the ledger. Now coming to the second entry. What is the second entry? Jane's account has been debited with $2,000. Whenever it is a debit, it comes on the left side of the account. So it should come here. So debit of 2,000 comes here in Jane's account. And what is the reason for that? Because we have repaid cash to Jane. So the explanation is to cash. Now coming to the second aspect of the transaction. Cash account has been credited with $2,000. So credit always comes on the right side of the account. So in the cash account on the right side, you have to credit it with $2,000. And what is the explanation that you have to write? By Jane. Now all that we have to do is balance the account. In Jane's account, the total of the credit side is $10,000 and the total of the debit side is $2,000. So what is the net balance? It is 10,000 minus 2,000. And since the credit side is more, the balance is a net credit of $8,000. And regarding the cash account, the total of the debit side is $10,000 and the total of the credit side is $2,000. So we have a net debit balance of $10,000 minus $2,000 or $8,000. So now what does these balances mean? It simply means that presently we are liable to pay Jane $8,000 and right now the cash balance available with us is $8,000. So we get the final position when we view the balance in each account. Now let's jump into the business scenario. Now, even if you are starting your own business, you cannot treat the business and yourself as one and the same person. You and the business are treated as two different people. So even if you invest $10,000 in your own business, the business, since it is treated as a different individual, it will treat that $10,000 as a liability to be paid back to you. So in the books of the business, this $10,000 that you have invested is also a liability. And the name given to the owner's funds is capital. So the business has received $10,000 in cash, which is to be paid back to you because that is the capital that you have invested in the business. So there are two accounts which are affected. One is the cash account because an asset is increasing, and the second one is you, or the capital account, which is a liability that the business has to repay to you. So we know that as per rule number 1, any increase in liability has to be credited. So definitely capital account has to be credited with $10,000 because the business has to repay $10,000 to you. And the business has got cash in its hands, and increase in asset has to be debited. So the cash account is debited with $10,000. So that's the first entry that the business will pass in its books of accounts. So now posting it to the ledger, we open two accounts. One is the capital account and the cash account. And we know that credit transactions are always recorded on the right side of the account, and the explanation or narration that you have to write in the capital account is by cash. And regarding the cash account, there is a debit of $10,000 which will come on the left side of the account, and the narration will be to capital account. So right now the business has $10,000 of cash balance. Now, out of this $10,000, if it invests $8,000 in a fixed deposit account with the bank, then how would the entries be reflected in the books of accounts? 8,000 is going from the business to the bank, and it is being deposited in the bank as a fixed deposit. So fixed deposit with the bank is definitely an asset, and $8,000 of cash is going out of the business. So which are the two accounts that will be affected? Fixed deposit account and cash account, right? Now, fixed deposit account is also an asset because it is a resource that can be used in the future accounting periods. And cash balance is also an asset. So what is happening here? The fixed deposit account, which is an asset, is increasing, in which case we have to debit the fixed deposit account. So fixed deposit account debit, and cash of $8,000, which is also an asset, is going out. So there is a reduction of asset as far as the cash is concerned. So cash account has to be credited. So cash account is credited with $8,000 and fixed deposit account is debited with $8,000. Both are assets. One asset, that's a fixed deposit account, is increasing and hence it is debited. And the next asset, that is a cash, it's getting reduced and hence it is credited. Going by rule number 1. And how do you post this journal entry into the ledger? You have to open a new account. That is a fixed deposit account. So fixed deposit is debited with $8,000. So it goes to the left side of the account, and cash account is credited. So it goes to the right side of the account. For the time being, I'm not writing the explanation because fixed deposit you have to write here to cash. Since it is very easy to write the explanation or the narration, we will leave it out for the time being. So now we know that the balance in the fixed deposit account is $8,000. And what is the balance in the cash account? Out of $10,000, $8,000 has already gone out of the business. So what is the balance left? Balance is the net debit, that is $10,000 debit minus $8,000 credit. So the net debit in the cash account works out to $2,000. So right now, the final balances in the accounts that we have created are: cash account, there is a net debit of $2,000. Fixed deposit with the bank is $8,000. And the capital account, that is the amount that you have invested in the business, is $10,000. As time passes by, the number of transactions that the business has to record increases, and the number of accounts created in the ledger also increases. So if we want to see the balances of all the accounts in one shot, then we have to prepare a list of final balances. So we will prepare a list of the final balances based on the accounts that we have created. So far, we have created only 3 accounts. So what are the final balances? The final balances is fixed deposit. There's a net debit balance of $8,000, indicating that the FD balance with the bank is $8,000. Capital account shows a credit balance of $10,000, which means that the business is liable to pay $10,000 to you because that's the amount that you have invested in the business. And cash account, it's a net debit of $2,000, indicating that is the balance of cash available in the business. And the total of the debit will always be equal to the total of the credit, because for every transaction, there is a debit and a credit aspect. And the list so prepared is known by the name trial balance. So what is a trial balance? A trial balance is a list that shows the closing balances of all accounts. And it is arranged column wise, that is the debits in one column and the credits in another column. So now we will see what are the steps that are taken by an accountant. So first he starts off with a journal entry, which means that one account will be debited and another account will be credited, because for every transaction, there is a debit and a credit aspect. Now these journal entries are recorded in different books, and these are known as the books of primary entry. Examples are cash book, just as the name indicates, wherein cash transactions are involved, it is recorded in the cash book. Sales book, wherein sales transactions are involved, it's recorded in the sales book. Purchase book, all purchase transactions are recorded in the purchase book. And journal is a book wherein all the other transactions are recorded. That is anything which is not related to cash, not related to sales, not related to purchases. And what is the next step? The journal entries get posted in the ledger, and in the ledger, different accounts will be opened, and an account is always T-shaped with the debit transactions recorded on the left side and the credit transactions recorded on the right side. And what is the next step? The accountant further extracts the trial balance. What is the trial balance? The trial balance is nothing but a list of all the accounts, and it is grouped as debit balances and credit balances, and finally the total is extracted. And definitely the total of debits will always be equal to the total of credits, because for every transaction, there is a debit and a credit aspect. Now, once the trial balance is extracted, the final step is to prepare the profit and loss account and balance sheet. Now, the profit and loss account is nothing but a statement which shows the profit or loss made by the business. So all the expenses and the income will come in the profit and loss account. Income minus expenses will give you the profit. And what do you mean by the balance sheet? Balance sheet is the statement which shows the position of the assets and liabilities of the business. So that's the job of an accountant. Just 4 steps. First, record the journal entry, then comes the ledger, then comes the trial balance, and finally, you extract the profit and loss account and the balance sheet. That's the ultimate purpose, because finally, we want to know what is the profit that we have earned and what is the position of assets and liabilities at the year end. Now, regarding journal entry, we know only one rule. That is rule number 1. That was solely related to assets and liabilities. Now, we've got just one more rule to learn. That is the rule relating to expenses and income. So let's move on to rule number 2. Now, rule number 2 is very closely related to rule number 1. Let me give you an example. Suppose your father is involved in stock market trading and he entrusts $10,000 to you for doing stock market transactions on behalf of him. You are not doing the transactions. It is on behalf of him that the transactions are being done. Okay. Then if you get an income from stock market trading, then you are liable to pay that income also to your father, right? Because you're doing the transactions only on behalf of him. So in effect, you're supposed to pay the $10,000 that he has invested in the stock market trading, along with any gain that has been generated. Likewise, if he makes a loss in stock market trading, then you don't need to pay the $10,000. You can reduce that loss that has been suffered and only the net amount need to be paid to your father. This is the same logic that you're applying when you're recording transactions in the books of the business. Now you have invested $10,000 in the business and the business is liable to pay $10,000 back to you. Increase in liability has to be credited. And the business is also liable to pay any income generated out of this $10,000 to you. That is, any income generated should also be credited in the books of the business. Why? Because the business is supposed to pay not only the liability of the $10,000, which is the capital, but also any income generated out of that capital. That is why increase in income is also credited in the books of the business, indicating that the business is liable to pay to you the income generated out of that capital. Now we will take the reverse. If the business incurs certain expenses, say it has paid salary of $100. If it has paid salary of $100, then it needn't pay $10,000 back to you. It can reduce that $100 and the business is liable to pay only the net amount to you. That is 10,000 minus $100. So naturally, if any increase in income has to be credited, then for any increase in expenses, we have to do just the opposite. We have to debit that particular account. And we will take the reverse also. If increase in income has to be credited, then decrease in income has to be debited, right? And if increase in expenses has to be debited, then any decrease in expenses has to be credited. So that is just an extension of rule number 2. So we will add that point also. Any decrease in income has to be debited and any decrease in expenses has to be credited. This one is exactly the opposite that has been mentioned in the first line. So that is the whole logic of the rules of debit and credit. So let's apply rule number 2 and do a journal entry. So now we have a fixed deposit of $8,000 and definitely for fixed deposit, the business will get an interest. Suppose the fixed deposit earns an interest at the rate of 10%. So 8,000 into 10% is $800. So the business receives an interest of $800. Now, fixed deposit interest is an income, right? It is an income for the business. So that particular account, that is fixed deposit interest account, has to be credited. Why? Because any increase in income has to be credited. So fixed deposit interest account, please note the word interest because interest is the income account. Fixed deposit account is the asset account. So fixed deposit interest account, which is the income account, has to be credited with $800. Now the business is receiving cash worth $800 and cash we know is an asset. So as per rule number 1, any increase in asset has to be debited. So definitely cash account is debited with $800. So that is the entry that the business will pass in its books for receipt of fixed deposit interest. And for every journal entry, we have to write a narration. So being FD interest received. Now, suppose we made an error in calculation of interest. Suppose if the interest to be paid by the bank is not at the rate of 10%, but it is at the rate of 8%. So what is the interest that the business has received? It's 8,000 into 8% or it is $640. But we already passed the entry for $800. And in accounting, there is no question of erasing an entry that has already been recorded. So what should you do? We should pass an entry for rectification to the extent of how much? 800 minus 640 or $160. So the reversal entry should be exactly the opposite. So the entry should be cash account credit with $160 because that is the amount that you have to rectify, and FD interest debit with $160. So what have we done here? We have created a rectification entry so that the net amount that is reflected in the FD interest account. FD interest account right now, the amount that is reflected is 800 credit. But when we pass this entry, it will be 160 debit. So 800 minus 160, the net effect that is reflected in FD interest
will be only $640. So we have the right amount in the account. And if you see this entry, going by the rules of debit and credit, according to rule number 2, any decrease in income has to be debited. Right now, the income, that's the FT interest account, is shown at an increased amount of $800. But actually, it is not that amount. So we have to reduce that income. Any decrease in income has to be debited, right? So that is why fixed deposit interest has been debited with $160. And as for cash, why is cash credited with $160? Right now, we have debited cash with $800. That is at an inflated amount, or that is at an increased amount. So we have to reduce the cash balance in the books. Whenever there is a reduction in cash, or whenever there is a reduction in asset, that account has to be credited. So any reduction in asset has to be credited. So that is why cash account has been credited here, to show that cash balance in the books of account has to be reduced by $160. So we add the narration or the explanation, being FD interest rectified. Now let's see the entry that is to be passed in the books of the business when an expense is being incurred. Say the business is paying a salary of $100 to the accountant. So how will the entry be? Salary, we know it is an expense, and any increase in expenses have to be debited. So definitely salary account has to be debited with $100 because salary is an expense account. And what are we losing? We are losing cash balance to the extent of $100. And as per rule number 1, any reduction in asset has to be credited. Cash is an asset, and there is a reduction of cash taking place when we are paying the salary. So cash account is credited with $100. And what is the narration? Being salary paid. Now to pass a journal entry, all that you need to know is rule number 1 and rule number 2. Rule number 1 is related to assets and liabilities, and rule number 2 is related to expenses and income. Now we want an easy method to remember this. So the memory tip is Dear Clint. Just remember the first 3 alphabets of these 2 words. So we will first focus on the debit. Debit any increase in expenses. D standing for debit and E standing for expenses. And debit any increase in assets. A standing for assets. Now regarding the credit aspect. Credit any increase in liabilities. C standing for credit, L standing for liability, and credit any increase in income. I standing for income. So if you just remember the words Dear Clint, that is the first 3 alphabets, you get the first line of rule 1 and rule 2. And we know that the second line of rule 1 and rule 2 is just the opposite. That is, if you know that increase in liability has to be credited, then definitely decrease in liability has to be debited. And if you know that increase in asset has to be debited, then you know that decrease in asset has to be credited. And likewise for rule 2, if you know that increase in income has to be credited, decrease in income has to be debited. And if increase in expenses has to be debited, then decrease in expenses has to be credited. So with these 2 words, you will be able to memorize rule 1 and rule 2 with ease.